Good morning, everybody. I hope everyone's doing well. And if you've been following my YouTube videos and these Instagram lives, you come in that I came in rather cautious, maybe negative to the stock market yesterday. I mean, we had some carnage last week. Today is March 2nd, time flies. And it's rather negative. I mean, I'm not making predictions. I mean, we're really just making observations of what's happening based on price and volume. And my interpretation of what I saw yesterday, and again, I could be 100% wrong, but again, we're trying to mitigate the risks and enhance our possibilities of profitable trades. It seems to me that it was a dead cat bounce. I mean, yes, we had this great run up, but it wasn't done on volume. Volume is conviction. That means people are actually buying a lot. And we didn't see that yesterday. I mean, we have a honeypot, and a honeypot, let's say for trading, is when the 21 period exponential moving average is greater than the 50 period exponential moving average. We're not there. I mean, we can turn down, and this morning when I'm looking at the Globex futures, they're negative. So it also kind of confirms a little bit more of my bias or my observation. I mean, the whole point of investing is trying to capture the upside when the market's healthy and mitigate the downside. And I do this really not overly complicated. I use rather simple moving averages as guardrails. If I'm below a 50 period moving average, I don't want to be in the market. Because you never know how bad it can get. And it can turn around. You will get whipsawed. This I can promise you. I mean, I've had trades that I get in, I get taken out, I have a 7% loss, and I have to get back in. This is like the psychology of all of this trading. It's not easy, but you need to trade with a plan. And again, I know I say it a million times, and maybe I'm talking to myself, but it's a plan that's thought out going back from 1994, that's based on fundamentals, that I'm trying to buy the best companies with the best earnings, strongest earnings, and current earnings, annual earnings, something new about them, something innovative like Zoom. Like, that's on my watch list. That's very interesting. Like Zoom, and let's say if we turn up. I don't have an opinion. I'll go long, I'll exit. I'm just no opinions, no predictions. I mean, Zoom is on my watch list for taking out like a Jesse Livermore pattern. If it goes to it, I'm a buyer. I mean, it has everything going for it. They had big earnings surprise yesterday. The same thing also with Trade Desk. If it gets to my buy points, I'm combining the fundamentals, again, strong super companies, and then the technicals of where is a point of maximum possibility or probability of the trade working. And even with that said, the majority of my trades don't work. And if people tell you, oh, I have a 70-80% win rate, they're lying to you. All you need is a couple of really good trades in a year to make your year. Because what trend following is small losses, small profits, which cancel out each other, the rare big wins, and the key is you really have to mitigate the big losses. And the way I do that, again, is just using these very simple moving averages. So in summation, what I feel is we had a dead cat bounce. Let it prove itself. I mean, we're reading the tea leaves. And this is what I suggest to you. Don't have an opinion. Don't just listen to somebody. Learn how to do this. This is what I'm looking to do, is try to teach. So have a great day and have a good trading plan. Thank you, everybody.